analysis. Thank you so much for joining me. I'm a little bit later than I normally am today, but that's cool because I've moved up to the north of Scotland. I'm in Forres, so I'll show you that on the map in a wee bit and you can see where I am. But let's just look here at the charts first. Let's look at the map that we all tuned in to look at first off, okay? We've had this big old rise up since March. I'm just starting off with the broader view. We'll go down to the smaller time frames and really check in with exactly how the prices are going along in just a moment. But yeah, since March the 13th, Friday the 13th of March or so, we've been in an upward trend, and that's been very, 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 very good for trading towards the top side. But we've always been looking at this with a sense of sort of trepidation throughout it, as we've had big drops down throughout this price action. So that's something to be aware of, and we've just had another one of those happen there now. Will this ultimately end up being just one of these drop downs that we've had along the way, such as here and here? Back there is the 10th of May, for instance, just in the sort of the 2nd of June, things like that. Let's just have a little comparison between them and see how they shape up against each other and check in then with the smaller time frames. But bear in mind that then we've been in this upward trend since March. Where were we before then? Well, we were in these highs, just get rid of that. We're up at the highs around about Valentine's Day 2020, and then we came down to the lows there and around about the 13th of March 2020. And this period of price action followed on from a very nice rise up the way that we had. Now, this period of time was only really over a period of a month and a half or so, you could say, from around about the start of the year up until Valentine's Day. And this period of upward price action has lasted quite a bit longer overall. When you look here from March up until May, was just a constant rise up the way, you could say. But then, actually, if you think about it in its entirety as an upward trend, it looks past this big section in the middle. So the longest period of time that we spent really since this last year was going sideways rather than up or down, you could really say, since around about the start of May up until the end of July. So that's something to bear in mind, really, in terms of where the price action has primarily been and where people were the most of the buying and selling has occurred, has been in and around about this area. So the idea that we could return here isn't too outlandish, but there are other things that we're looking at, I'm sure, at the moment, such as where we could go in terms of moving higher, and there's various targets that we have in mind. You know, even up as high as the 1618 retracement. So where does that Fibonacci? Where's that been drawn in from? Well, that was drawn in the highs of the 26th of June 2019, taken down to the lows over here on the 13th of March. And if we just look over to the left then and make a little comparison, where is that 1618 coming in at? Well, if we look over to the left, we can see that that actually comes in at the all-time highs. Now, is it incredible or be outlandish as well to think that we could go up to the 1618? Well, we frequently do, and when we're looking at charts and doing technical analysis, we see that the prices can actually retrace as high as the 1618, which is, you know, beyond a retrace at that point, and you're looking about going up and even asking the question about all-time highs at that point there. So plenty of things would need to happen along the way there. If you wanted to look even further back in time, now believe me, I will in a second go down to the low time frames. Just wanted to kind of really, you know, start off with the broad picture here. I've changed the location up to Forres, thought I would kind of, you know, freshen things up a little bit. So yeah, if we look back over to the left and draw in a Fibonacci as well, from the highs up there down to the following lows down in February, or no, well, December 2018 is where I drew that down to, then you can see that the 618 retracement on this area, you know, a key area to be aware of is, of course, in there at the 14,000 to 13,500 area for that golden pocket retrace, which we actually achieved back there in June before sliding down the way again. And if we make the comparison then looking over to the left and see where the prices are currently, they're right in here at the 50% retrace area, which is also in and around about this 0786 retracement area as well. And it's kind of so far come in between these two, looking up towards that 886 area as well at 12,734. So in terms of trading this thing, what will our next target be? Will the next target be up towards that 12,700 area, or will they actually be back down towards one of these other areas that we're looking at? For instance, the 618 golden pocket zone on this Fibonacci, that the one that we were just the 786 is on, starting off there in the 27th of June, going down towards the lows. That 618 area comes in around about that 9,900 to 10,000 area. And if we look over here, that's where the 236 Fibonacci retracement is drawn in on this one. Now, I might have to actually reposition this. I don't think I've got it drawn in correctly, because the highs came up slightly higher than where I drew it in at. Yeah, so so 10,150 or so is the 236 on that one, and that lands it right in the middle of this golden pocket area. So we can kind of then, I suppose, narrowing this down, as we go along, look between the two areas then for for whether or not we've got targets up or down. From the current price action prices at 11,370, we're looking at the minute and asking, will we go up towards 12,734? Looking at a $1,400 or so increase in the price. Or will we be going down towards that 236 there at 10,151, looking at a $1,300 decrease in the price or so, in and around these areas, depending on which way we kind of look at this. So let's just then zoom on in and see where we have been recently. And thanks very much, by the way, for sticking with me through the video, and I hope you appreciated the broader view. It's always good to do that and just kind of see where we stand right now in the bigger picture before kind of putting on our bull goggles, you could call them, and going down towards the low time frames and all the rest of it. So let's just check in then with the most recent rise up in the price action. By the way, if you're interested, all these lines that I've got on the BitMEX chart, they've been here since before I even started YouTubing. So we're talking about a long time ago these all came in. It's kind of interesting to see how historic price action, I just kind of drew them in back, I can't remember when, maybe even as far back as then or then. And it's just interesting to see how they overlap. Now, I've never bothered removing them from the charts, even though they're not strictly speaking relevant to what we're doing here. But I just thought I'd leave it in there just for that interest for you. If you don't do that yourself, or if whatever, just because I thought it was interesting. How old historical support, which seems to be in the middle of nowhere, or resistance, etc., comes back into interact with the price. Just it's a good reminder as well. I'm saying that despite the fact that when you zoom in enough, it looks like there's just clear skies above us, that there are actually things there just lurking around. So what did I think we would do first off here before zooming down the timeframes? Well, we'll check in here and see if there's any divergence. Just hide all the drawings. You can see that this high in the stochastics and the RSI is higher than there. And the MACD, I suppose, as well, you could make that comparison. But the DMI isn't. So you've got, out of the 4 oscillators I've got on the chart at the minute, calling all these oscillators, I don't really care if you want to call it an oscillator, an indicator, or whatever terminology you want to use. These things, that you can see that 3 out of 4 of them have managed to come up to these highs without that divergence. So that's interesting. And there's a couple of ways of looking at this volume. Yes, it's decreasing, so that's negative in a sense. But then as well, we increased right up in this movement up outside of this historic, this area where it had become historic at that point, a few months, where we were breaking out of this area and moving up the way that was associated with this volume here. And then we had a bit of follow through and it came up a bit higher. Now the volume has just dropped off a bit, and there's 2 ways of looking at that at the minute. You could say that perhaps supply is kind of drying up a wee bit as the prices went up here, requiring less of sort of price action transactions to occur in order for the prices to move up a bit higher, because of the lack of liquidity in that area, which is maybe what you would hope to see at key areas of historical resistance before moving on past them, because then it means that all of the sort of the liquidity is being dried up, that there aren't any more sellers coming in at that price. They'd rather sell higher, and that the demand, assuming that it would stay constant or maybe even increase, would then push the price up higher. So it's not a bad thing necessarily to have a reduction in volume when you're having a trend up the way, if you see that it's coming in at a certain point in time with regards to the historical support and resistance and the potential psychological levels. Okay, so that's a wee less, I suppose that's a takeaway for today. And if I put the drawings back on then again, and you can see then, like I say, put this line in a long time ago, that this dried up at the activity went down a little bit when we were coming up towards this area. So I think that does make it a little bit more key for us in terms of where we could be to give us our first shine a light on in terms of that question that we're trying to ask. Will we go down to 236 or at 10,151, or will we go up to the 886 on the other one up there at 12,700? Was it? We can look first of all to this and say that closes below this are kind of essentially bearish, and closes above this are kind of bullish, right? That's just kind of what we can look at, and just generally speaking. There's, Of course, that's not to say that the market in entirety is bearish or whatever. I'm not putting a label on it. I'm just saying, just with regards to this line. With regards to other things on here, we're above the 21. Like I said, we've not got that divergence showing up on this time frame. We're above historical consolidation here. This took a long time to think about where we were going before we came here. So all of those things are very, very positive. So that's all good. But let's just so just to counterbalance what I'm saying there. Now, actually, yeah, there's one last thing I was going to do in the 24-hour time frame before moving on. I'm sorry about the length of this video as well. It's not going to speed up the process of me getting it out there for you to watch. What I wanted to, but I want to give everybody this detail. Looking at that there, going that drop that we had, that was a 13% decline in the price, in that wick there, which was obviously very shocking to people who, were going long up there, creating liquidity in terms of stops and liquidations for the prices as they were being pushed around by the bigger fish. Likewise, people shorting the top and stuff like that maybe got hunted out here in this movement up the way, where we ultimately put in the highs around about that 12k number, and then we slammed right back down to the 10,500 or so level. So how does that compare to other ups and downs that we've seen along the way in recent past? Well, if we compare the high that we had on the 1st of June up there at that wick down to there, we moved down here on the 2nd of June, you could say it's 17%. You could also just take it from on the one candle basis that we had done on the other one, you're looking at closer to sort of 16%. So it's similar in that regard to what we had there. So this volatility is not necessarily completely alien to us. If we look back again as well and do a comparison around that 8th of May high down the way, we're looking at another 20% decline as part of this bull trend. So a couple of things can be said about that. Just as immediate sort of takeaways is that if we were to see a pullback like what we've had here, and then more of the same, that would put us right back down into very sort of significant downward zones. Going down for, first off, you'd be going down to this 236 and perhaps down to one of these other areas that we've already got marked out on the charts. And it would be two of these kind of actions in a row, or continuation following on from one, unlike these, what we've seen so far. Now, you could look as well to these wicks and say how much the price action got pushed right back up again. Sure, we did see it descend down again afterwards, but we never took out the wicks afterwards, okay? And we had a sort of bullish response to the candle as it came down the way. So looking here at this one that we just had, well, we had a bit of a bullish response to the price action when it came down, pushing it back up there. But, we've not managed to move past either of these zones. So if we look up towards where the tops of these candles are, just looking here, you can see significant area, significant, if we were to then go past the top of this candle up there at that 12,000, 12,200 area, then, and that would obviously be preceded by having opens and closes above this 11,600 area, moving up another $600 towards this 12,200 area, then very much so could be going up the rest of the way towards that 12,700 area fairly easily, achieving an open and a close above this wick over here. Same sort of story could be said towards the downside at that 10,500 area, where you could very much be looking down towards the towards our previous lows, or sorry, towards the 236, sorry, and then going on then thereafter, perhaps again to where the previous lows were in, and saying that this overall structure is a high, and if we were to put in a higher low, that could go anywhere as far down as 9,000 or so, 9,100, 9,000, before you actually consider it to be making a lower low thereafter in terms of the daily time frame, depending on your perspective, of course, about this. Of course, you could say that our previous low came in there at 10,900, but I think that when you look at the way that the price action is here spread out with that volatility, that you could easily see lower lows than this previous low come in while still remaining bullish, and that this was really part of the flux on the way up the way, and that I wouldn't necessarily consider that to be a high. So bearing that in mind and looking back the way towards where the previous highs were, if you just take any of these, then you're looking at not being divergent really on any of the oscillators. So that's a positive thing in and of itself. But then again, this is it's a little bit premature in a sense to be comparing the highs at the end of a consolidation period to the one high that you have during a bull period, to be able to say whether or not that's divergent between each other, because you're talking about a couple of different phases. Let's go on down the time frame then. I think I'm giving out some good information here. I really do think there's value to be had in this episode, but it's hard for me to tell as I work through it, live. I hope you like the tartan stuff I've got behind me, by the way. I'm in Scotland after all. Yeah, let's look down the time frames, but actually, before doing that, I'll introduce you to where I am in Scotland, shall I? I'm in this place called Forres. Let me know down below where you are in the world because I am interested. I would love to know. And if I zoom on out, I mean, I know where some people are from, of course. If I zoom on out, you can see just where I am in the world. It's crazy. I'm quite high up here in the north of Scotland, which is beyond the wall. If you were to, the wall. Where was the wall in Game of Thrones? If you can think of this as being like the Game of Thrones map, where was it? Ignore this. It says I'm in London. It's lying. I'm not in London. Where was the wall? Well, Hadrian's Wall was around about here, historically, or was it lower? I think it was lower than that, wasn't it? Yeah, it's more like bleh, like this. Look that up if you're interested. That, of course, inspired the wall for Game of Thrones. Where was it? Where did they have the wall at? Where would Winterfell be? Let me know where you think Winterfell would be on this map. Of course, normally I'm in Edinburgh, which is the capital of Scotland. And if I zoom on out, then I know, I know where some people are from. Shout out to Ross, who's from Dublin. Shout out to Peter, who's from well, South Africa, actually, in England, but lives in Prague, right? Is that right? I'm pretty sure you live in Prague, which is awesome, over there in Sisnia. And shout outs to other people. Etienne, my first French subscriber, was lived in somewhere in France. Chad, well, we all know where Chad lives. I didn't know that. I wouldn't say that Chad is necessarily one of my subscribers, but Chad is definitely involved in the Bitcoin market. I know that there's people from over here. I think Kevin is in Texas. Is that right? There's other people. I think Spidey Monkey's over here in California. So let me know anyway where you're from in the world. This is where I am right now, up here in this little tiny wee place, and it's a global world that we live in nowadays. So beautiful place, beautiful stuff. Whiskey, forest, trees, mountains, seaside, wonderful, all fantastic. Right, going back over here, let's look at the 4-hour time frame. I hope you enjoyed that little interlude, by the way. 4-hour time frame. So we have this drop down in the price here, and this came in at a high, which was following on from the previous high that you could look at. And if we look down at the oscillators down below, then we can see that 3 out of 4, just ignoring the stochastics here, we're in fact actually putting in a bit of divergence here at this high at the time, before we drop down the way. So that was kind of that was a little bit of a warning sign to us, I suppose, as we were coming up. But you only can look at that and whenever it becomes a reality, and that would need it to be a local high. And in fact, sort of the outcome from this could have maybe if it could have shed its skin, so to speak, in that movement. That's kind of what we're trying to discover here at the minute. Did it actually get rid of the shackles of the bearish divergence and now can continue to trend towards the top side, having allowed the oscillators to reset, or not? I will comment just here briefly on the stochastics. If I go down to the 1-hour time frame, zoom out a wee bit, you can see the chopsticks that we had surrounding it before, talking about it being in a wedge type shape of some form or another. You could have had it potentially as a sort of an ascending triangle in the end if you had liked to see that it actually broke towards the downside. Of course, when you're looking at where the top end of this ascending triangle is, it's coming in there above 100. So like the chances of you getting up there and having a breakout towards the top side were kind of slim in that respect. But in terms of the symmetrical triangle view, which we had on it before, if I could just get this guy and move him a wee bit. So we were looking at this before. Well, we had this what looked like a breakout towards the top side, and that's when it kind of threw in that last gasp up here before dropping down the way. And if we look at where the volume candle is here, this huge big one is right on the drop. Of course, the volume candles preceding this beforehand were all kind of also lower than the ones on the run up to it. We saw this drop down in the volume on the way up here at the same time coming in with all this. So that's kind of like maybe how you would have kept your finger on the pulse with that one. The DM negative then immediately crossing towards the top side, allowing the ADX to remain in it with above 20. So strength of trend still existing, obviously diminishing off the way. And then asking the question throughout this period, will we actually start to initiate a downward trend thereafter? Well, at the minute, we see that the DMI's ticked around again with the positive above the negative, and that we've managed to come up so far during this period without any of that divergence. But where we have found ourselves is that we're up here in this overbought territory yet again. We're putting in a lower high on the stochastics compared to where we were before, but the price action is still lower. And we, the volume has been diminishing off the way, apart from just here where it kind of came up a little bit, but overall, actually, it's still definitely diminishing, including the most recent highs. And we're doing it, we're doing it without the divergence. So could if we see that this is able to push on up the way and go past our previous high area here in this candle and take it out at 12,200, for instance, then things would be looking rosy enough again. But maybe along the way we might see some more volatility. Just perhaps just now, it's a little bit disappointing to see in a sense that the stochastics managed to make it all the way up to there, and in terms of their positioning of the price here, just still being below that 11,400 area during that malaise over the last day where the price has been down the way at the minute. But that is good to have that as well to keep us sort of sharp, to be aware that there's these potentials towards the downside. So where we are currently is of course coming in above all the major moving averages, having just seen the 21 and the 55 cross. Is that right? Or am I speaking ahead of myself? No, they're just about to though. So should the prices remain above that 11,200 area where the 21 right now is, 21 EMA, that would be quite positive, and you'd see these crossover and all that sort of stuff with their upward slope on the go on both of them as well, like the 55 and the 21. That'd be very good, and remain above the 50. If the prices do drop back down below 11,250, then you're probably going back down below the 50 simple moving average, which we have been above throughout all of this upward movement. So multiple closes below it, like we've had recently, are a little bit different. And then if we'd be then going down below the 21, the 55, preventing potentially or uncrossing those afterwards, and causing a bit of potential downside, potential. We can look back then at these times that we talked about it before, the price action having done similar stuff, and it really does come down to looking at how things pan out over the period of this little consolidation period that we've got on the go, following on from the drops down that are similar to what we were looking at here. So this sort of thing here, at the minute, the difference between all of these is that we're above all of the moving averages when we were below them before. Let me see over here, this one here, we're all below all of it down here, below the 21 and everything else, interacting with that quite significantly, quite obviously. This is that drop down at the start of June. Actually, this is that drop down at the start of June. Same sort of chat though, anyway. Below all of these moving averages, interacting with them below each other, etc., etc., etc. Looking over to the that got quite positive there whenever there was that cross, but we came back down, retested all these things again. Let's just look back then to where they are currently and just draw that quick comparison and say that, the prices are currently above all the moving averages, which are still spread out in a bullish formation. But should we see that downward price action, then you can see on this lower time frame how those things would all start to turn around again. And you maybe get pre-warning in a sense, or at least, early sort of aggressive style confirmation on whether or not things would be turning around slightly to perhaps take advantage of any moves towards the downside. That's all on the 1 hour time frame. On the 4 hour time frame, you can see that sorry if I said 4 hour when I was during 1 hour. We're looking at the 21 though in a roughly similar sort of situation. 11,293 on the 4 hour, 11,297. Almost exactly the same where the 21 is. So still looking at the same thing. If we close below that, then we could be going down towards the other things down below. Okie dokie. And what else do I really want to talk about in today's episode? Well, I suppose there's a few things that I haven't spoken about that I should really cover. For instance, the gaps. Now, what I was looking at over the weekend here with this one is how we came up towards the top and there we'd actually almost filled, but not quite this gap. So I don't know if you were looking at it yourself at the time. Of course, if you had played off of the back of this and then shorted it there, in anticipation of the gap within $10 of it, so you'd have been wise to have operated like that anyway, with an easy to manage risk, very easy to manage. You're talking about your trade here, and if you were just managing in and around this gap line, looking potentially to short it down the way, very, very, very easily done and very much manageable. Therefore, they're relatively low risk trading. Came back up again, retested it. We also filled in maybe a gap on the hourly and stuff around this time with this move, not really sure. We'd have to go down to it to look, can't be bothered. Then we came back up here and we came into this zone, and you can see that we've come up and we're back in the gap fill area, but we've not actually managed to fill out that last $10. Now, where was the price action over the weekend? If I just leave it on the 4 hour screen, bearing in mind there's 11,785, and I go over to one of these charts that's open over the weekend, you can see 11,700 or whatever coming in here, but the price action went all the way up to 12,000. What did it go on this chart? 12,091. What about on BitMEX here? 12,172. So, in fact, fact, as well, you can see the dynamic. When we were talking about how on BitMEX we want to see it taking out that 12,171 area. Suppose over here in Bitstamp you could say the same sort of chat, but you'd be looking up towards a slightly lower area. In fact, let's just check in with that because that might be something of interest to people. 12,134, 12,097, 12,123. That's whatever. So if you're looking at the previous high, then there's going to be a difference of around about 100, which makes it a little bit different, a little bit, more sketchy to say that we've definitely done it if you're looking at this sort of area of 12,100. To say that we've taken that out, not necessarily when in the same time frame it went an additional sort of $90 or $80 or whatever up, the way $70 or so up on this one. You're looking for, it'll be a bit more gray area around about that time. So there's another little piece of value for people to take away. That's good. I'm glad to be doing that. You can see here in the 4-hour time frame just how clearly divergent this high was going to be coming in unless we pushed on. Now, given the fact that we'd come all the way up to around about the 12,000s and we're looking at that area, there would be two ways of looking at this over the weekend. One is that, if we push on any higher, we're going to have this gap on the CME chart, and for sure, even if we maintain these prices. And another one is to say that, hey, look, we just did that over the last weekend. So, and we're just breaking into the 12,000 area, which is a significant area from the past, having moved above this line, finding support on this line as well, then moving up again, extra sort of positive things there. So you wouldn't have known that this was going to actually turn out to be divergent like that until it actually started happening. But in that case, you would have known, and a drop back down to any of these areas could have made for an easy enough short where you're still looking at getting near enough $1,000 move down the way. In fact, if you just shorted it from that line, the blue line down the way, managing your risk, then indeed you did get a full $1,000 move on that one. So that's totally fantastic. So it was easy enough to manage it once it happened. But of course, it's always, when I'm talking about things being premature and stuff like that, if I say it again, it's like that situation. You have to keep an eye out for these things yourself, because these videos aren't 24/7 live stream. What was the other things I want to talk about? We've crossed over here. This is okay. We come down, we've tested the 50 simple in the 4-hour time frame. These things that you could expect or anticipate happening, and they've happened, and it's been okay so far. So it does boil down to what we were looking at really before. And let's go down a way a bit. So suppose people will be wanting to know where I think it's going next. Well, I don't like doing this sort of thing, so I probably won't give anybody exact answers or anything on this, but just looking at it, well, really, actually, for me, I would say that the easiest play at the minute would be to be shorting and around about that 11.5 area. I'm not a financial advisor, that's financial advice. That would offer up the easiest manageable risk probably at the minute. Looking at this one, if you want to go and really, this is the 15-minute time frame though. On the other hand, so taking out this previous wick over here at 10,332, could see the prices going back down to, or 11,300, could see the prices going back down to that 11,150 area. I want to see them move above 11,489, come in here, short in and around this area, and then if it depends on how the price action's going, with a relatively easy to manage risk, longing it up, I suppose, beforehand is what you would say. But I'm only telling you that because I'm in severe pain right now, actually, as it happens, and I'm on painkillers. Otherwise, I wouldn't be saying any of that myself right now. So I'm going to have to just snap back into myself and realize that we don't want to be telling people exactly what to do on this channel ever. That's not what we're all about. Movements up above that, of course, will put us back into this parallel channel, making it easier to manage that risk again, looking towards then perhaps even longing it up the way, taking out the previous high on this really tiny time frame at 11,500 would obviously be very positive. What about the 1 hour? I'm sure there was other things I intended on saying, but like I say, painkillers. I'm a little bit kind of curious as to how this actually, I'm just going to wrap it up here. I'm curious about this price action. What was it? Well, with these Fibonacci's in there, so it's a right mess. What have I done? God, what time frame would they have been on? That's all completely useless. Better tune out now before I start getting crazy. Right, thanks very much for tuning in. Really do appreciate it. I've been Rocky Outcrop. We'll be Rocky Outcrop tomorrow. Maybe a little bit more Compass Menace. I suppose they weren't completely useless, actually, looking at that. And we'll take a look at the charts again then, and it'll be great, and everything will be lovely. And yeah, I hope you're doing really well wherever you are in the world. And let me know where you're from. Exactly, that's what I was talking about earlier on with the map and whatnot. So let me know where you are in the world now, showing you where I am just now. And what else is there to say? Yeah, okay, I must have covered everything enough. Obviously, there's a minutia looking at the price action between the here and there, here and those points that I pointed out. Couldn't, whatever, whatever. You've got other folk to watch for that, I'm sure. And then there's the big picture stuff, and we covered that at the start, I think. Catch you next time. Thanks very much for tuning in. Share it with your friends. YouTube.com/RockyOutcrop. Oh, we're back. Dun, dun.